Case study presentation, Adrian Sanchez Tiburcio, Grand Canyon University. This is the business issue at hand. ABC Tech, a startup organization whose mission is to provide affordable computer security product for every person worldwide. Their vision, cybercrime and personal security breaches protection. They provide elegant production solution. They provide single implementation and single update to users in computer operating systems. Their core values, honesty, integrity, diversity, agility, and safety. This is a consultation by the ASanchezTi firm that will provide to ABC Tech two resolutions. Their case, either accept the merging offer from a large company worth $500,000 or should they retain the business. This consultation firm will also provide ethical implications. This firm will show that it strongly recommends to retain business and wait as a final recommendation. The AST firm recognizes the dilemma, to merge a business or not. The C-suite executive will notice ABC Tech has two main choices of handling the merger offer. Why this consulting firm recommends not to accept the offer, the ultimate decision will be made by ABC Tech. This presentation clearly suggests, based on the case study, to retain the company and to wait. This all comes with supported research and discussion provided. The cybersecurity market. It has been growing. This is a growing market even prior to 2020. The market saw an increase over 60% in cybersecurity incidents since March 2020, February, May, and 2021. Since March 2020, there has been approximately 45% increase in desktop usage. There has been a higher need for cybersecurity. The global e-commerce market size has grown by 31%. The cybersecurity market has grown dramatically and shows no slowing down. Here we're providing Harvard Group information. Harvard Group is a cybersecurity company with 300 total employees. It generates $55.37 million in sales, and it was purchased by AT&T Canada for $30 million. Now it's worth and valued at $100 million USD, more 2022. Provided here as well is an example of the graph, which shows that in 2017, the industry just in healthcare was a $5.10 billion industry. And then this graph here shows how it is projected to more than triple by 2025. Also, please notice that this graph and snapshot excludes other industries such as defense and government, telecom and intercommunications, automotive, import-export, energy, travel, and many, many more. Accepting offer scenarios. Should ABC Tech accept the $500,000, then this consulting firm highly suggests that it does so under terms and conditions. Chris and Thunder, the current CFO and CEO, need to remain the CFO and COO under those conditions. They need to also be in charge of the marketing brand of the business and administration decisions of the business, as well as ethical issues. The best scenario offers brings the expense cost and liability cost to decrease to the former owners, which is good. Same research shows by Braw and Slade 2006 that large companies merging attracts synergy and channels of other companies. Further, creates profitable effect on stock market when investors obtain positive leading information. Let's look at now the owning benefits. Again, this consulting firm recommends strongly to have no sale and to retain and wait, because owning provides more benefits and less risk. Owning controls assets, creates revenue opportunities, uses benefits of appreciation or depreciation of the property value, makes capital improvements according to Smith, Pennings, Van Bacon 2017, and overall, retaining and waiting will be ethically a less risk than merging. The owning benefits mentioned are important to increase the number of employees and expand the market. ABC Tech will need 100 plus employees to compete against the elite cyber companies as the one shown. because owning a business means owning the ethical rights and decisions of the company. Studies show that there are less ethical risks when retaining a firm. Let's look at the ethical implications now for accepting the offer and retaining and waiting. ABC Tech, beware. The innovations and core values can be commercialized with internal managing, according to Cook and Young, 1986. There are many ethical factors not known to from the merging company. The ethical factors categories are four: the impact, the preservation, the corporate policies, and compatibility. Here we're providing a sample question of what an unknown factor of compatibility is. For example, ABC Tech, do you know what policies are going to transfer and where your plant and location will be or expanded? Let's get into more detail as far as impact, preservation, corporate policies, and compatibility prompt questions. ABC Tech, what criteria do you determine that you will have disadvantages or advantages from the stakeholders as from the merger? ABC Tech, what will be the impact of those disadvantages or advantages? Are the impacts worth the merger? Are the impacts repairable? Point number two, preservation. What aspects need to be preserved? Included in the terms. How do ABC Tech's values compare to the mergers? Again, are they compatible? That's item number three. How serious are the differences? The corporate policies. What policies need to be preserved? The policies decided here on the terms need to lessen any negative impact to shareholders and stakeholders, including future employees and their families. 4. Compatibility. What defines ABC Tech? Will the current culture of ABC Tech carry over with the large corporate company? These are evaluative question frames to rate the compatibility for the terms. As you can see from these questions, there are too many unknowns. Meanwhile, the impact ABC Tech wants to make as far as the preservation and policies that will be at risk, pending the compatibility with the merging company. Too many unknowns. Now, retain and wait. This consulting firm, the first thing that it really strongly suggests is to obtain a quality appraisal. Know your worth. Know ABC Tech's net worth. A reminder, ABC Tech, you can make righteous decisions knowing your true net worth. How do you know it's worth $500,000? How do you not know it's worth $500,000, for example? You need a good appraisal. A good appraisal contains descriptive definitions of the value and only includes support of those values. An appraiser can only advocate for the advocacy of the report or is a violation of the ethic rules. That's TOTCA 2006. Therefore, ethical transaction certainty remains as owner of ABC Tech. In summary, for this recommendation, we're going to look at the financial impact and the ethical impact. The cybersecurity system saw an increase of over 60% in 2020, as worded before. The CS market is expected to grow 30% to up to 60% each next year. The compounded growth of revenue for ABC Tech, who had a revenue of $250,000 the first year, is projected to be at least $1.2 million in 2026, or projected to be around $6.7 million by 2026 at 60% growth. Therefore, it has been calculated by this consulting firm for ABC Tech to retain and wait to at least 2026, where the future net worth of ABC Tech would be about $6 million, with the average revenue being $572 per year. In a couple of years, ABC Tech should have all their long-term debts paid. Therefore, they can invest in human resources, which they need for growth, and they can only and they should be able to just use their capital to manage short-term liabilities or short-term debt. The ethical impact. Retain company knowing core values, and you get to also keep the core values, mission, and vision from the company. You get to know your true net present value of the company. You can wait, therefore, and sell as needed in 2026, where you can make a greater impact with greater revenue projected. More people can, therefore, as your values show, be safe from cybercrime with ABC Tech's product by 2026.